Hey everyone, I'm Josh Levy. I'm the co-founder and CEO of a company called Document Crunch. The best way I could describe Document Crunch at a high level is that we are making construction contracts super easy to understand for everybody in our industry. I'm a longtime construction attorney. That's all I've ever done my entire career. I was in private practice for a big construction law firm representing big general contractors and other stakeholders nationally. And then I went in-house and ran the legal department for the Southeast business unit of an E&R top 20 general contractor. And in all these experiences, I've just come to understand that our industry struggles with managing risk in its contracts. So that starts in the back office when you're bidding and negotiating projects. But certainly, and what Margaret and I were just actually talking about, is the real passion that I have is those folks out there wearing hard hats every day that have to administrate the contract to keep fee in the job. And so all of this has led, my entire kind of professional experience has led to Document Crunch, and really happy to be here. I count all of these folks on this entire panel as friends, and to Adam's point before, I think that if I could just instill one thing in this discussion today, it's about us as an industry working as a team to be better, right? And so we can't do it without you all, and I'd like to think that you all could use us and the solutions that we have as well. And so I'm all about the collaborative effort to drive this industry forward. It's not easy, but I'm very inspired by what I've seen in the 5 years that I've been at this game now. And so thank you for being here, and hopefully we can all learn something today.
How's it going, guys? My name is Tom Dean. I'm the co-founder and CEO at Project Mark. We are a CRM designed specifically for the construction industry. Bit about myself, similar to Josh, I was 10 years in the industry, hail from Ireland, you've probably guessed that already. Came over about 13 years ago with literally 1,500 bucks in the bank account. Myself, my co-founder, who's actually my college roommate from back in the day, always inspired by America. We wanted to move and work on the biggest and best projects. Spent, a good 7-8 years working on some major developments in the United States, both East and West Coast. Was always obsessed with the business development side of things, the interview, the RFP process, and knew how much of a pain the RFP process was, and also just continuing to stay on top of relationships and then communicating why you were qualified. I loved the interview situation. So we started to see the opportunity. Myself and Noel actually ended up on the same project together years later. We started to see the opportunity in the marketing and business development space. We call it the pre-construction. So we've been doing that for the past 3.5 years, and to echo Josh, it's great to see folks out in the audience, and that's what we need, more involvement from contractors at this early stage. Thanks.
Hey everybody, my name is Ryan Meitl. I'm a co-founder and CEO of a company called RIVET Work. So RIVET's a workforce management platform for construction specialty contractors. And really specifically, we serve the electrical construction industry. So we've been growing a little bit into MEP, and I think probably in talking about go-to-market, we'll elaborate a little bit on that. We serve other trades, but we really specifically focus on the electrical construction industry, where labor is one of the most important components of every single job, every single proposal, and execution. Labor makes or breaks the profitability of every single job. And as we've found, 97% of companies do not use a platform or a system for workforce management, for workforce scheduling, for workforce capacity planning, and all of those things are extremely important to the profitability of those businesses. And so I have an electrical engineering degree. By background, I worked in the lighting industry, which is sort of much maligned in electrical construction. So I have a lot of empathy with my customers and the pain they used to feel using the products that I used to work on. So that's us.
That's great. I'm Andrew Zukoski. I'm one of the co-founders and CEO at Join, which is a tool for achieving cost certainty on design, build, and construction manager at-risk projects. So we do a lot of institutional work, primarily with E&R 400 general contractors. My background is not from the industry. I'm like a software nerd person who wandered in the back door, I guess, and decided to stay. So, that's me. You'll just grab the mic for me when I ramble too long. The RICP is a general contractor who wants to. ICP. The ICP is about narrowing and figuring out how to target people that you really solve a burning need for. And you think about it at the company level, and we think about it at the persona level as well. And at the persona level, the most burning need is someone from a general contractor who's on a pre-construction team, who's working on a $30 million like new medical clinic, who tomorrow, a week ago got a new design issuance, and tomorrow has to walk into a meeting with the owner and the architect and explain why the owner can't have all the nice things that the architect drew in the last design issuance. They've got to go in and very quickly build trust with the owner that, they're not trying to increase their own profitability at the expense of the owner, convey a lot of complicated information around where the project is in terms of cost and schedule and risk and the design implications of different options that are on the table. And then they got to get the owner to hurry up and make a dang decision so that the project can move forward. And at the firm level for us, it's a ENR 400 general contractor who wishes to excel in design, build, or construction manager at risk delivery methods. Those situations where they would be involved early in providing cost and constructability feedback. Go to market. For us, it's a very project-centric. I think there's quite a range here, but for us, it's very project-centric. So we tend to win an office or a few projects where there's some really acute need, and then have an expansion motion inside of the customers that starts with one project or 3 projects, and then grows to nationwide adoption for the largest customers. Yeah, is that the right? Cool. Yeah.
All right, so at Rivet, our ideal customer profile, first I'll start at the firm level, is an MEP contractor with 50 or more field workers. That means they usually do 10 million to 15 million in revenue and up. We serve customers with as many as 1,600 in the field, and we serve customers with as few as 25, but really we try to filter for 50 plus. That's where the pain for labor management, labor forecasting becomes really acute. And then really specifically, just because of our background and kind of where we focused originally, it's even more specifically electrical construction. And then it's businesses that are doing commercial industrial work, so not residential. Commercial residential commercial industrial or institutional, which is essentially commercial construction for the most part. And so that's what our firm level looks like. And then in terms of our user or our champion, so it's usually a VP of operations or a general superintendent at one of these specialty contractors. This person works probably 80 to 100 hours a week, because coordinating labor in the field without a platform is extremely arduous and painful. And they're involved in many arguments throughout the week about who's going to get what field workers. And so there's a lot of stress in the job, and that's something we see really acutely with our persona, our user, at our customers. And so obviously the platform can help the businesses become more profitable, but it also solves real specific pain points on the job for our core users.
Yeah, so for us, it's mid to large specialty subcontractors and general contractors. In the specialty subcontractor range, more so electrical, mechanical, drywall, and then exterior cladding as well. And then on the general contracted side, anywhere between 100 employees north. In terms of buying persona, business development directors, C-suites, directors of pre-construction, directors of marketing. Oftentimes our clients are folks that are still utilizing Excel as an example to manage their pipeline, understand their win-loss ratios, things like that, have a real difficulty in pulling together high quality packages. And then there's the other side that are fighting with Salesforce or fighting with old school technologies that are looking for just an easier way, and we're just trying to keep it as simple as possible.
So I'll start with our ideal customer profile. We'll do this interactively. So for those of you who are architects, contractors, suppliers, show of hands. Anyone who's doing any construction work, show of hands. Okay. Do any of you, keep your hands up, please. Anybody here not bid work? You can put your hands down. Anyone not bid work? Does anyone not bid other people's contracts? Does anyone here with your hands up have a lawyer that looks at every single notice or change order or payment application that goes out? Everyone? You're our ideal customer profile. So if you're bidding other people's contracts and or you don't have someone who's looking at every single piece of paper that in the field that has to do with the contract, you're our ideal customer profile. But today, our go-to-market is mostly centered around general contractors and trade contractors who have between 0 and 2 in-house lawyers. And if they have 0 in-house lawyers, they have a risk management or financial professional who actually stays up at night thinking about things like, how are we going to bid these contracts? Are we signing up for the wrong deal? Do my folks in the field understand what they're doing when it comes to change management and giving notices per the terms of the contract? That's great. Yeah, so again, I think my background is kind of an important baseline for this. So, I've made a lot of money in my career, getting paid like hourly to review people's work, and I was always incentivized, frankly, to take longer to do the work, right? That's the business model of like the traditional legal profession. So that led me to first like make the jump to go in-house, right? I didn't believe in that, even though like, I was entrepreneurial, obviously, as an outside lawyer, but I was like, this is crazy. Like, how is it that, the longer I take, the more money I make? That doesn't make sense. And then I was in-house, and that was such a formative experience for me because I'd be heads down doing all this legal work that you would expect the general counsel to be doing every day. But I would just have a line of people outside my office every single day, hard hat in one hand, piece of paper in the other hand, coming in from the job site and saying, something happened on the job site. Do we have insurance for this? How do we give notice? Who's responsible? How much does this cost? What's the allowable markup? And I realized that my function in-house was almost like becoming like the Siri for contracts for the company. And I was thinking like, look, our margins, like, I got very involved in the business side of being in-house, and our margins aren't very big. And here I am, like, giving this, like, essentially like a wet blankie for these folks in the field that are doing unbelievable work every single day, yet they're coming to me to, like, just regurgitate the contract because they lack confidence, because it's a black box. And I just started realizing that, when I had time, I could really help teach folks to do this themselves and not have to over-rely on me. And frankly, there was a correlation to that and getting better outcomes in the field. Like if they didn't come in my office and they just handled it in the project trailer, like that was good. Once they were in my office, now I was spinning things a certain way. Whoever they were talking to in the project trailer was in someone else's office down the street, was spinning things a certain way. We were gonna have to give up fee, right? We were gonna negotiate because it was a gray area. Like just win the deal in the field. Right? Just get it done and move forward and paper it the right way. And anyway, I just realized that like at some point in time, probably about 5-6 years ago, like the racket needed to be up already. Like people like me don't need to be this like middle layer of inefficient, expensive, like knowledge, frankly. Like there's so much. It's not to say that we don't have a role, but there's just so much that our industry can do themselves. And it means that we would have less risky projects. And so I started just thinking that way, and frankly, I realized that there was a more efficient way to kind of get out what it was that I was doing, and so we started examining artificial intelligence and realized that we could start kind of baking some of this into the way folks could, go through their regular workflows, and that was my aha moment.
That was 2017-ish?
It was 5 years ago, almost exactly, when we started.
Document Crunch launched 2018, is that right?
Document Crunch was in stealth mode 5 years ago, and then right before the pandemic, we launched commercially.
Yep.
So I guess 3.5 years now, like commercial, but it took me a few years to like actually get this thing up to the standard that I wanted it to. So when you ask what's gone well and what hasn't, I mean, that's such a great question. Look, it's been a great overall journey. But there are definitely moments, I think, in any entrepreneurial business when, when you just question, I mean, especially in the early days. I mean, I distinctly remember when we did launch publicly, and here I was, like, the general counsel of a big contractor, and I remember people, like, came in my office, these project executives, who, by the way, I was trying to, like, democratize essentially what it was, my relationship with them into software, and they came in my office, I remember a few of them, they were like, don't you love your 401k here and the ESOP that we have? And I remember, like, you have those moments where it's like, what am I doing? I have a great life, great job. I've got 2 young kids and live in a house in the suburbs of Atlanta, and I've, had a good run of it. I liked what I was doing. So I'd say some of that, like, self-doubt has been, like, that's a hurdle for you aspiring folks out there that you have to get over. If there was one lesson from this whole experience that I could, instill in my kids, it would be, just follow like what is in your heart, because there is going to be a doubt. Not everyone sees the world the same way you do. If you're actually inspired to go do that thing that I was inspired to do 5 years ago. So I would say some of that is, and you knew me early on, some of that, it took me 1.5 years to make the leap full time, because I was a little bit risk adverse maybe. But what's gone well? Well, it's been an incredible company run so far, and the thing that has gone most well, and what I did not ever have insight into when I started this, was how incredible of a team that we were going to be able to attract. And so I tell people all the time, like my mom would tell you what a smart boy I am and what a great idea this is, and that's awesome. But the reality is it would have just been an idea, except we've been able to build a peerless team. Actually, my chief operating officer, Trent, is here filming in the back. And, you know, I could get a little almost choked up thinking about some of the team building that I've been able to do, you know, experienced operators in software to come in and kind of wrap around what we're doing. And so the expertise that we've been able to bring in is awesome, but frankly, the energy that my team has, you can't have the growth that we've had, you can't have the customer loyalty that we've had, and you've seen it, without a team that wakes up every single day that just is so inspired by what we're doing and frankly goes the extra mile. I guess, I don't know what this is rated, we call it the gas factor, the give a shit factor. And our gas factor is off the charts at Document Crunch. I never would have realized, like, I'm so humbled by the team that we've been able to build, and that's clearly been the biggest hack for our company and what's gone the best. I feel so grateful. There's just no way that this would have been at the level that it would have been at if if I was just kind of doing this in my own view. But the team and the people that we've attracted, and frankly the partners too, investors, channel partners. I mean, it's just been amazing to see the type of people that have rallied around this idea that started 5 years ago when I had that aha moment and said, like, I've got to just do something different. So, yeah.
Yeah, just to touch on that point, myself and my co-founder use the burn the boat analogy. You're taking on the island, you have to burn the boat and you have to commit. And funnily enough, in the earlier stages, we went out with kind of an MVP of a really big idea, but it was the wrong idea at the beginning. It was, to provide more visibility for companies on almost like a LinkedIn type construction, and all these guys know this idea, including Adam. And probably the luckiest moment for us at that point in time was our co-founder was still waiting on his green card. I already, got the green card, burned the boat. I was all in. And thankfully, I think it was through COVID, it extended a certain amount of months, and, we started to self-fund ourselves once again. And every month, Noel used to pay me on Venmo half his Tishman construction wage until we started to figure things out. So it's that type of perseverance and mentality that you have to burn the boat. If you're going to commit all in. Things are not going to go right. I think there's a media perception that, like, this overnight success thing, people raising a whole bunch of money, it takes so much effort and so much critical thinking and so much time with customers, because that's really what led us in the right way in terms of internal processes, getting into the pain points of RFP, getting into the pain points of sales. That's where we should have been focusing our time from the beginning, but it took all the commitment and effort from our early team. And I think one of the things that we were inspired by was we started to demo with prospects and especially subcontractor owners, and then we get an email on the side, hey, can I chat to you for 15 minutes, have a chat, and they wanted to invest in the company. And that's what I would say for any folks that are looking to start, like, really dive into folks that are really interested in your business, because, if you are a subcontractor owner and you're talking to a startup and they haven't raised a massive round, they're likely looking for investment as well. And I think what we were able to do was gain, confidence by 15, 18 owner-operators all across California, folks that we didn't know. And we came over here not knowing anybody and started to build relationships, of course, over the last 7-8 years. But that's really got us going then, and started to, more funding allows to make almost, more early mistakes as you're talking to customers, and then you're evolving. And then it's about fundraising at the same time. So I'll hand it off and let somebody else chat.
Yeah, so going back to kind of like what was the light bulb moment for us. And so, we're a workforce management platform. And, the light bulb moment for us was when I learned, specifically in like union construction and union electrical construction, how the workforce gets deployed from the hall to the companies. And, this whole process, and if you're not familiar with it, the companies put in what's called a job call, because it's a call, like a phone call to the union hall, that we need additional people. So many people, certain certifications or qualifications on this job site on this date. The workers that are unemployed would come into the hall, sign a paper book. It's like King James Bible, like thickness, like it's paper. And they even like write their social security number in this book, like extremely unsecure. And you know, I learned about this process like a long time ago. I was like, wow, like this is how labor is being allocated, like at like my friends' businesses. Like this is insane. And you know, that's actually what we kind of like started on. And this is before we took any money and before we actually like wrote code in the business. And we sort of like moved away from that and, you know, saw the need at the companies, because the companies had just as outdated of a process. It wasn't paper-based. It was maybe a whiteboard or an Excel spreadsheet, which is better than, you know, a paper book and a phone call, but still very manual. So that was kind of like the light bulb moment for us, to kind of start to look into and dive into workforce management. And from there, we've just sort of like followed our customers, you know, our customers' leads. And, you know, in terms of like what's gone well, really our early design partners, like our earliest customers, are some of the most important and most influential people in the success of Rivet. Obviously like people, like our team too, but like from our customers, those early customers, getting them, making them successful, turning them into net promoters, becoming referral engines for us has been like one of the key fuelers of our growth in our business. And yeah, just like to piggyback on these other themes, like the team, the people are what matters. The people at our customers are what matter, and then the people on our team is what matters. So, yeah.
Cool. Yeah, if there was one light bulb moment for us, it was I'm not from the industry, right? We just been if you guys didn't know, construction is very complicated and it takes a long time to learn about if you're not coming from it. And so we spent years like learning about the industry, and it would be a hilarious set of conversations where you'd go up and like you'd be like little I'm from Silicon Valley. I'm like a total stereotype. You'd show up and you'd say like, how do buildings get built? And they like people give you like a couple of nuggets, and like you could sort of ask questions until you asked a question that didn't make any sense at all. And then like this person would be like, what are you? And like be done sort of talking to you. But then you get to go talk to someone else. You make it further in the next conversation. So you sort of like, you collect information and it takes time and it's brutal, but like eventually people are like, okay, I can have an hour-long conversation with you and you're not saying anything that's too stupid. And that was a great moment for us. And one of the conversations that unlocked was with a real estate developer who was describing, we're just asking about like, how do you figure out what this thing costs? Like, how do you figure out like what goes into this building? Like, how do you actually, like, why is it that chandelier? Like, just like walk me through this. And he described a project he was on. It was mixed use multifamily, like probably like 4-on-1. Actually no, it probably wasn't, because I think it was a concrete structure, but he described how they realized they were over budget and needed to look at ways to save money. And they described like, well, you know, the building's pretty expensive. Like, let's just squish it a bit and like lower the floor to floor height. We'll go from like 12 foot to 10 foot or 10 foot to 9 foot or whatever it was. And you know, we'll save money in structural costs. We'll save money in facades and a little bit of drywall on the inside. Like, it'll be great. And they added all this up and they said, okay, let's go forward and do this. And they went forward and changed the designs, and then a few weeks later, their electrical engineer called and said, like, you know, hey, like, you moved all the stuff that, like, all of our stuff is going to connect to, so we have to redraw all of it, and we'll be sending you, you know, the bill for the redesign. And they're like, all right, well, you know, I guess we're still saving money, but not as much money. And a few more weeks go by, and then, like, the mechanical, like, engineer calls and says, hey, there's a lot less space now. Like, this building, you know, there's a lot less space for all of our systems. And so not only have we had to redesign, and here's the bill for this, we're actually having to use more expensive components. Like, we have to use this more expensive system that we're able to fit in, like, the reduced space. And here's the bill for that. And that, like, drove the cost up past the savings. Okay? But it was too late at that point to back out and change it. So the project went forward with the lower floor-to-floor height, which means that it's worse for like the lifespan of the building. This 100-year building or whatever it's going to be, like, is worse because of this decision that they made. And they didn't save any money making this decision. We were just like, okay, this is really dumb. Like, there's gotta, like, this can't be like how this happens. There's got to be a way for technology to connect the people making those decisions to information about like what the consequences are. And yeah, that was kind of the light bulb moment of like, okay, like, we can probably build a thing that helps with this. And then we did. Yeah, in terms of what's gone well, yeah, okay, here's one really specific thing and one really general mom and apple pie thing. One really specific thing is I'm not a repeat founder. I've worked at other startups. as a company grows, you end up needing to add all these new functions, right? Like when it starts, it's like 2 founders and you guys like type all the code and talk to all the customers and completely understand everything about the business. But as it grows, you end up needing more and more specialized functions. You hire specialized engineers, and then you hire specialized product designers, and then a customer success team, and then a sales team, and then you've got account managers who are handling like existing customers and account executives who are like working on new customers. And each time it happens, it's like the organism is getting a new specialized organ. It's like all of a sudden like, hey, we've got a liver now. Like we can process all this alcohol you keep putting inside of us. Like you're getting like these new functions, and it's really important as it goes that like you're able to like add these things, because it's that like specialty that lets you excel and lets you build a scalable thing and make it go from this like crazy ad hoc sales process to like something that's repeatable and scalable. The mistake that we've made several times is that it's very, very, very difficult for someone who hasn't excelled in that function to come into a growing company and establish it. Like we hire a lot of people from industry. We hire a lot of people, former architects, former construction people who want to break into tech and are ambitious and hungry, and like one day will found companies of their own, and I really hope they let me invest like when they do. And so we hire a lot of growers, right? We fundamentally believe in the potential of people and the ability of people to grow. But when you're establishing like a new role, it's going to be the first person in a role. It's very, very, very difficult for someone to succeed inside the organization, even if the organization wants them to succeed, like without having already excelled at it. That was like a really specific, unpleasant at times learning. I gotta talk long enough.
Like as Andrew's sitting up here speaking, all I'm thinking, and I've known him now for years, is like, what a great co-founder this guy would have been for me. All right, because I'm an industry guy. Like I understand the pain. I've worked with you all for my entire career. I don't know anything about code. I didn't know anything about all these organisms that he's talking about, once upon a time. Half of my SaaS knowledge came from him. Software as a service, by the way, right? I was just a lawyer. And so I think like to put a finer point on it, I think that like the most successful companies that I have seen in our space you have to start, my opinion is, and I think Andrew's kind of hacked his way to a great company and his product is awesome. I admire what they're doing quite a bit. For us, our secret sauce has been like that empathy for the customer as a starting point. Like it's all I know. I couldn't tell you anything about what metrics software company, like 5 years, I knew none of this stuff. I'm not even technologically inclined in my personal life. I'm not like a tech person. Seriously, like I don't have a passion. I tell my team, we're not even a tech company. We're just a helping people understand what's in their contracts company that happens to use tech. But he's right. I mean, to build a successful software company, you have to be able to start putting some structure and processes around building a software company. So I think that like this you have to round it out, and I think that this idea of making sure that you bring in experienced operators to build that foundation is incredibly important. It can't say just magical and aw shucks forever. It has to start there, but then you have to put some processes and scale functions around it.
Just a quick funny story about very similar to Josh around the lack of technology expertise that we had. We were construction people and all we knew was schedule. And from a product engineering perspective, once the engineering team had a schedule, we expected that to be delivered. We knew nothing about bugs and things like that. We were like, well, why isn't the product being delivered on time? And that's funny because our customer base and client base, they expect the same because they're expected to deliver on schedule. So that was a learning experience, and we had to become patient. And our CTO was like, this is engineering. This is engineering here. So that was just a quick funny story.
No, we failed at that. Or we pivoted, right? We pivoted away from that. We actually like worked on a legal contract with our local IBW union hall for about 6 months. And there was like a budget, and I was like, okay, I can like take this, we can build the platform. They're not gonna be able to pay for it at all, but like I'll be able to go finance it and go, resell it, et cetera. And that budget was like some number, it was in the 6-figure range a year. And after like 5 months, they came back and were like, we can spend $1,500 on this. And so we're like, okay, I guess we're gonna move on to something else. But yeah. Yes, I hear it's going to happen. The new IBW president is all about actually like digitizing the book, and so they call it the book. So we will plug into it when this happens. So I'll provide and then I'll hand it off, like a little bit of context that I think like a lot of founders, the way they look at this particular problem. There's a great book called Crossing the Chasm. It's kind of like considered like one of the Bibles for technology businesses introducing new technology into like existing markets. And it's been, I think there's been 40 years, 30 years like of revisions of this book with like new data from new industries that have digitally transformed. It's proven, and it's funny because like my mentors, like when I was even before I started Rivet and I was working on other kind of like startup-y stuff, they're like, this is the Bible. You need to this is true. Just like know that this is true. And like we kind of ignored some of it, and then in the end, 4 years later, I'm like, it was all true. Like you were right. I should have listened to you. But one of the key tenets of it is basically, you cannot serve the whole market at once. At the very beginning, there's, they have what's called like the early adopter segment, and there's the innovators, and there's like the early adopters, and like they comprise of I think like 15% of the total market. And for a company like ours, that's actually like all we're going after at the beginning, because only 15% of the market's even like ready to buy. And so like this technology aversion is not unique to construction. It's in every single industry that is like adopting new technology. And companies that are coming in and serving or introducing new tools, like it's only the first 15% for quite a while. And the business has to mature to a certain point, and you have to have enough customers. I mean, we even see it in our business. Like we start to get critical mass, and then our customers are in peer groups, and they have other, so then they're telling their peers about our products and our services. And that's like how you start to like break out of just the early adopters. And there's these different categories: early adopters, early majority, late majority, and then like the laggards. And that's like really how like we look at it, because it's actually like how the world works, and it's how technology adoption has sort of worked over time. And so it's honestly just like 15% of companies are ready. And so like as a startup, it's really hard to do early when you just want someone to talk to you, and you just want someone to listen to you or give you feedback. And a lot of people will be like, nope, I'm not interested, go away. But eventually, like we got really disciplined, and it's just like, okay, time is not now. We'll come back. We won't call you. We'll come back in a year. We'll come back in 2 years. It's okay, because there's lots of other companies that are. We just have to go find them. We got to go find those 15% of companies that are ready to buy today. So it doesn't solve like the internal dilemma of like, there's a problem, we need to solve it. But just from our standpoint, like we are looking for those companies that are ready to buy, because they exist. And there's 15% of the market is in that list.
We actually have that adoption graph in our sales deck, and we have our logo, and we have all our clients, and we have a column called visionaries, and we say we're looking for partners that are seeking change. If you have been frustrated with Salesforce or been frustrated with Cosentral, another product, and want to embrace a brand new sales and marketing infrastructure, here's your time. You have influence with us and partner with us, and to Ryan's point, it's not for everybody, but at least it delineates, and it sets the expectation for ourselves. And there is companies out there that will engage and want to seek change. I think, for me, I understand it, right? I understand the resistance, because construction is a risky game, right? And it's hard to potentially gamble on an early stage startup, on a particular project when you're competitive and you need to meet schedules. So it's just that balance. And I think the ecosystem with venture capital, with all of us making noise every day on social and things like that, there is definitely change. And I think the construction tech market, it's almost like stay on the field long enough, like similar to the Trimbles and the other technologies in the world. It's if you stay on the field, then there's buyer confidence. Then you're bringing together a series of logos. Then you can name drop them logos, and then all of a sudden it starts to really roll out. But early days it's tough.
I think it's a great question that you raise, and yes, I've read that book, and there's a lot of studies and statistics on that. Here's the deal: it is freaking hard. It's hard, and our industry, notwithstanding the books, is a little bit risk averse or change averse. And candidly, if like none of us should be up here if we don't have the fortitude, the grit, and frankly the inspiration around what it is that we're doing. And a fundamental optimistic belief that now is the time that our industry starts changing. And it has. Like, it truly has. Like, this is what this is about. It is hard. It's hard. But you wouldn't be in this room right now if you weren't slightly curious about what successful startups in the construction tech ecosystem look like. And so why do we come here? Like, why did I fly here from Atlanta, to spend a few days here, to connect with a few of you, right? And it is a movement that goes one customer at a time at first. The really cool thing is, having been in this game now for a few years, I can tell you it's much easier for us to sell our product today than it was 3 years ago. Way easier. Why? Because we have customers and we have brand recognition, and you start putting those building blocks, one building block at a time, but you are highlighting the grind of what this is. And if someone didn't have the backbone to face that grind, then this is a terrible business to be in. I may as well just go back to my law firm and start just redlining contracts. It was a hell of a living I used to make. But that's not why I'm here. I'm here because I see a brighter future for our industry. And I believe that now is the time that we're changing. And frankly, I'm going to put it back on all of you in this audience. You're the change agents for this industry. We have to come up with great products. We have to come up with real solutions that solve real business problems. And so that's on us, and you should hold us accountable to that, right? Because if we can't do that, then we haven't even earned the right to be here. But you all are the change agents. And going back to the theme of what we started, we can't do it without you. You all, it's on you all to help move this industry forward. We're trying our hardest to do our part, but you all have to be leaders in this industry alongside of us. And if we do that, I do believe that our industry is moving forward. I mean, that's why you all are here. There's 6,000 or 7,000 people, or whatever it is, at this conference, all about technology, right? I mean, everyone here is curious. We know that, and I think that that's what inspires me every single day. And we're seeing it, but it does take an awful lot of grit. There's no sugarcoating it. Our industry is slower than others, for sure. So you've got to really believe in what you're doing. There's no get rich quick scheme. You hear about these other companies and other industries that go from 0 to 10,000 customers in a year or something like that. That doesn't happen in construction. You're right. So you better have a long view, and you better be inspired by what it is that you're doing if you're going to be here. But I'll put it back on you all. Hopefully you leave this conference, whether it's today, this panel, or this conference, with some new ideas and with an openness to moving your organizations forward. Because frankly, that's the only way our industry is going to get better. And there is a lot afloat between where we are today and what a more profitable industry looks like. And hopefully we can all own the float, to use a nice industry term, right? Hopefully we own the float, because we can get better, we can level up as an industry. But it's a partnership, for sure.
I'll share a slightly different perspective real quick. We are just getting started with that question.
You got to start with the customer. You're raising a critically important question that, candidly is even a work in progress for my company, which, has quite a bit of customers now in our industry. It's a process. It's an evolution. Looking back on it, it felt quite arbitrary, how we started with our pricing. I can't believe where we started versus where we are today. But that's, again, we talk about partnership, right? With the industry. Our customers are shaping our entire company every single day. The product, the pricing, the value received, the negatives. I mean, that customer feedback is everything. And so, I think some of these folks said, you got to start with that 15%, right? You have to start with that group that really wants to partner, and that's where all the magic is happening. I mean, my earliest customers, we have some big contractors using our product, and some of them would literally proudly be like, I helped build this product. Our fingerprints are all over this. And again, that's been a little bit of a secret to our success, is that just being super collaborative with our customers. So I mean, there are customers that I've literally we're rolling out a new product now. We're really moving much further from the back office into project level solutions now. And we went to some of our best customers, and I said, hey, you can lock into this right now. You tell me what you think the pricing is. And that's where we are starting with that, right? Because then you start building, then data starts informing it, but you need that feedback. But that's how we've done it. And then, frankly, we've had some really great mentors. I'll just share. So Adam has been invested in Document Crunch for 2.5 years, 2 years. Adam came to me in January of this year and said, you've really got to tighten up your pricing and packaging. Like, what, and so we did a data-driven study based on who was using our product, how they were using our product. We started like tying some real data to that, and we got a lot more transparent about, like who was getting the most value out of our product. And frankly, that's like a great example of going from like, oh, this is like a magical, great idea to let's put like the liver in place now and have some real structure to what it is that we're doing. So now, if you told me like the type of profile you were, I'd say, oh, I think you're going to use this an average of X amount of times per week, and I've got data to support this. And that's the evolution, but it takes, like, I think customer feedback, frankly, is the most important. But then, adding some of that operational expertise has also helped as well. Did that answer the question?
Yeah, I'd say pricing strategy early, our approach was we wanted proof of value. So we wanted customers to pay us some number of dollars initially. The tricky thing was undercutting the addressable market. And so we're all venture-backed, and that means that all of us have walked into a room with an investor, probably with multiple, and looked them in the eye and convinced them that, like, hey, we're building what could be $1 billion company one day. And it's not that what you price at initially or what you take to market initially is the fullest expression of like what the company could be or what the product could be. I mean, I'm sure everybody's very ambitious in terms of the eventual value, but like if you undercut that addressable market, I mean, if you go, you could probably find 400 interested GCs in the ENR 400 if you could explain to them, we'll give you all the functionality of Procore at 1/10 of the price, right? It probably, or like we'll give you Viewpoint, but for like 1% of the cost of Viewpoint. The problem is undercutting like the price to that degree may mean that the market doesn't actually support like the company that's necessary to build the product and service it. And so that was like the tricky thing, was that it was like, okay, what do you guys want to pay for this? But like, by the way, we need it to be in the fullness of time at least this number. And so it was, we were always feeling out and continue to where the price can be, given sort of future additions, and then trying to discount back to like, in the early days, well, man, I think we gave a bunch of like 90% discounts, like, because we were trying to establish eventual value at the same time that we were, like trying to just get someone to put some money down so that they would be committed to the rollout and success of the product. So I don't know if anybody else thinks about it that way, but that's how we did it.
For us, there's like two components. One is the market, because the market matters, and that's like how we would talk about it with investors, but it's also how we would look at it internally, is like, is this a price that could actually like build a big business? Because it's actually quite expensive. Like these startups like us are like loss making for quite a while, because you have to it's very expensive to engineer them, and then you have to support them, and then there's bugs that people don't expect, and you have to fix those, and so it actually like costs a lot of money. So you have to be able to have a serviceable or total addressable market eventually that you can serve that's like big enough. And so that's like one component of the pricing at the beginning. And then it was just ultimately like, what will people pay? And we, with our first customers, real specifically, like we were just like, okay, this is the number, and this is the number we like pitch people that we're gonna like go to market at, and we would give them that number, and they'd be like, no, we'll pay like 40% of that. And then we're just like, okay, we'll take that. And so like that's how it started. And then over time, more and more customers, and a part of it was also like, there's like this rule of 10, you want 10 times ROI on like a software investment. And so that was like always in the back of our minds, is could this price be justified at 10x? Can the customer see it and say, I'll pay this because I'm gonna get 10x back in value? And that's always been like a core to how we like thought about pricing at the beginning. And at the very beginning, and this was because of the product maturity, 3 years ago, the customers would say, it's not worth 10x that. So like, we'll pay this. And we're like, okay, we'll take that, because then you're gonna help us build the product. And they were these early design partners. And then over time, frankly, like what happens is the price moves up because the value increases, because you're providing more value to your customers over time. And as you also like, you're not as it's not such a risk for a company to buy your product. People are willing to pay a lot more. And so, that's like, we started here, we moved our pricing to here, our pricing is now gonna be up here. And frankly, it's like we're still loss making, so it's all basically required for us to continue to serve our customers, and our customers understand that, and they see the value, and the value is more clear over time. So yeah, it's like very hard early on, but yeah, same thing. It's like the market component, and then rule of 10 was kind of like how we thought about it, and then just whatever people will pay.
Yeah, for us, real quick, we went super competitive. We handed out our product. We prioritized as many customer conversations as possible, because then we learned what customers weren't for us, and then where the value was, where the product feedback was, and then it's really only in the last, say, 12 months we've really started to elevate our pricing. And it's funny because it was the balance of walking into folks like Adam, and they turned around and trying to really understand the value of what companies would pay. And we started to get creative with LOIs and things like that. Hey, if we did this, this, and this, would you pay this? And then that's where we started to, engage some signatures as well in the early days.
Just one more thought, because I think all of us are at a certain level of maturity now, but the market then starts to become defined. So my sales team now is so much tighter on knowing exactly how to price. Why? Because 20 of your peers are buying it at this price. If I sold you this cup of coffee for $100, you'd be like, well, why, right? But if we have data to support that it's worth $5, then it just becomes so much of a streamlined discussion too. So the market feedback is critical, and then establishing that market is everything. And then if you can build value on top of that, to your point, it's not we're just charging the same, or we're charging more for the same product. No, I'm again, going back to my construction, I had a lesson learned earlier this year. I went to my VP of product, and I was like, okay, our initial product, this back office solution, everyone loves it now. It's great. He's like, yeah, it's great. It's okay, so like a construction project, this is substantially complete. Let's just take this crew and move it to the next thing that I want to do. And he was like, products don't work that way. This is now a forever thing. The crew stays on premises with the initial product, because our customers will keep pulling more features out of us, and then they'll be willing to pay more if you add more features. So we literally had to stand up, unbeknownst to me, a second team to do the next thing. And so over time, you start charging more because people are saying, well, if you did this, I would pay more because we could do that. So it's truly an evolution, but there's never, it never stops. It just goes forever. I didn't realize that. So that was a good lesson learned for me. Yeah, make your time here at this conference count. I said it already, but my rallying cry is be leaders. We can't do this without that industry feedback. And so be leaders, support change. You're here for a reason, but you need to model that. This is if this is just some cute panel that you attended, that's one thing. But if you can come away from this conference saying, there is something that I want to try, and I am going to be a change agent internally, that's what our industry needs. And so we're up here all hustling so hard to bring our industry to a brighter future, but partnership is everything. So the one thing I would say is do something about it. Don't just be passive participants, but actually do something about it and help us bring our industry to a better place.
Yeah, just to echo Josh, early customer feedback, participation, being involved in the ecosystem is absolutely critical for startups. There's a lot of noise about technology innovation, and oftentimes that's where the resistance is, folks saying that the industry is broken, as an example. That's by no means the case. The construction industry is one of the most innovative industries if you think about all the things we've built without technology, but there's incredible technologies that exist today that are going to improve your bottom line, that are going to reduce risk, that are going to improve your sales process. And it's just about providing the time or giving the time to some of these early companies and spreading the word, and that does us massive favors.
I'm going to make a bit of a marketing pitch. So we have a podcast that we've been producing over the last 6 months, and it's actually been done wonders for our pipeline. Essentially, it's called "Construction is Hard," and it's not just a a bunch of startup people talking about startup things. It's a 45-year construction veteran, vice president of operations, electrical contractor, talking about workforce management. And so I would say if you are a specialty contractor or specialty contractor adjacent or workforce management curious, check out Construction is Hard. Come by, talk to us, learn more about what we do. We'd love to hear your feedback. For the podcast, we've got flyers at our booth. So come by the booth. We've got flyers. You can learn about Gary. He's the man. So
Cool. I'm here to learn. I'm hoping to learn from some general contractors about viewpoint and project financials, because it's an area we're getting tugged into more and more. So that's my simple ask. Yeah, actually, at least inside, I don't know about the trades. On the general contractor side, for the first ones, innovation departments were very helpful for navigating the wider organization. You don't want to sell to innovation because they don't have any money and they tend to look at shiny new things, and you want to have a durable business over time. But they were great, for example, for helping us find like who is the most forward-looking mid-level estimator at this national general contractor, and like how do we get him in a room and spend a day with him. Like we didn't know that, but the like internal innovation team did know that, so we said hi to them and ran past them to the subject matter experts who became eventual user champions. So that worked really well for us.
References. So like our first and one of our biggest and most important customers, like that reference came from, we failed to digitize the book in the Union Hall, but the same folks that were working with us there, you know, made an introduction to the VP of operations at what became like one of our first and largest customers. And they wouldn't have taken that meeting without that reference. And so I'd say like just people within your network, degrees of separation, like that's how you get in the door at the beginning, and then you build from there.
Yeah, I would say 5 to 10 logos is all you need, really. 2 to 3 logos almost. So you'll get there. There's people that are going to give you the time. It's pure perseverance. It might be through references, it might be through cold calling, but if you can get 5 to 10 logos in the first, say, 4 or 5 months of you early building your product, then you know that's a game changer.
I'll be a little bit more tactical. So far and away, I wish it wasn't the case because it's expensive, but these events have been and still continue to be just such a huge source for us. And I think the reason why is like, you know, most of our industry doesn't know that they have a contract review problem. So how are you going to cold call someone and talk to them about it? But when they're, you know, able in a frame of mind to stop by and say, what is it that you all do? Like, it's just been gold for us. So, you know, it's been very organic, and then it builds on itself. Now we can cold call because a lot of people know who we are. But these events are everything, frankly. I wish it weren't the case because these hotel rooms aren't cheap. Neither are the drinks here. You know, but that is the truth. This is a relational industry. And I think that's also a misconception that a lot of like outsiders that are looking at like investing in this industry, you know, they don't like realize this is a relational industry. So you heard a bunch of people talk about references. Well, that's just a function of the relationships as well. And so these events are awesome.